Alright, gang. It's your boy Nature, aka Nature. Alright, so we back for another video. Alright, gang. In this video, we're going to go over, we just went over how to use Fibonacci retracement with support and resistance. Alright, so in our next video, we're going to go over how to use Fibonacci retracement with trend lines. Okay? So, alright, gang. Don't judge each day by the harvest you reap, but by the seeds you plant. Alright, so don't judge each day by the harvest you reap, but by the seeds you plant. That's by Robert Stevenson. Shout out to you. Alright, so gang, let's start this video. How to use Fibonacci retracements with trend lines. So how to use Fibonacci retracement with trend lines. Another good tool to combine with the Fibonacci retracement tool is the trend line analyst. After all, Fibonacci retracement levels work best when the market is trending. So this makes a lot of sense to use trend lines. So remember that whenever a pair is in a downtrend or an uptrend, traders use a Fibonacci retracement level as a way to get in on a trade, to enter a trade, okay, to find entries. This is how you find sniper entries, okay? Fibonacci retracement, okay? So why not look for levels where Fibonacci levels line up right with the trend line or right with the trend? Here's a 1 hour chart of ALZ/JPY. As you can see, the price has been respecting a short-term ascending trend line over the past couple of days. So this is a 1 hour chart of Aussie versus JPY, the Japanese yen, Australia dollar versus the Japanese yen. As you can see, price has been respecting a short-term ascending trend line over the past couple of days. So let's see what's going on. This is a short ascending trend line over a past couple of days. This is what it looks like on a 1 hour, 60 minutes, 1 hour chart. Alright, a trend line. There's the trend line right here. It's right here highlighted. This is the trend line, and it's going up. It's an uptrend line. Alright, so we're going to talk how you can use trend line and Fibonacci retracement too. Alright, in this video. So in a couple of days, in the 1 hour chart, Aussie versus JPY, Japanese yen, Australia dollar is a short-term ascending trend line over the past couple of days. So you thinking to yourself, it's a sweet uptrend right there. I want to buy Aussie/JPY, even if it's just for a short-term trade. I think I'll buy one pair and hit the trend line again when it hits the trend line again. So basically, this is a rising trend line, and basically you drew your trend line, and when price hits your trend line again, when price retraces off the trend line, right? Because right now it's not at the trend line, but when price retraces off the trend line, that's when you're going to get in for this example. All right, so let's see what happens, right? Before you do that, though, why don't you reach for your Forex toolbox and get the Fibonacci retracement? And let's see if we can get a more exact entry price. Okay, for price, we can get a more exact entry where price is going to potentially go once it retraces back. So we bring out the Fibonacci retracement. All right. Still the same trend, still the same ascending trend line, 1 hour trend line, okay? Like I said, once price bounces off, that's when you would, you could have got in right there. But if you didn't get in right there, you will draw the swing low, which is right here, to the swing high. And you already know these are the horizontal lines or retracement lines, okay? For price to retrace back to these levels, they'll either retrace back to 23.6, 382, 50, 618, or 764, okay? If it usually trace back to 764, we might be headed in a downtrend. But this is an uptrend, so in an uptrend, you buy at the support, you buy low, so you take the swing low to the swing high. All right. So before you do though, why don't you reach out your Forex toolbox and get a Fibonacci retracement tool out, and let's see if we can get a more exact entry price, okay? Here we plotted the Fibonacci retracement levels by using a swing low at 82.61 and the swing high was at 83.84. Okay, so 82.61 and 83.84, I think it was. 82.61 was the 82.61 was the swing low, and 83, I think it was 84 right here. It's 84 right here, so 83 is right below 84, and it was 82 or 80. The swing low for this was, I think it was yeah, it was the swing. The swing low was 82.61, and the swing high was 83.84. Okay, so 82.61. This was the swing low. This is how you read it. 61, 82.50 right here. 82.61 is a little bit above it. So that's the swing low, and the swing high was at 83.84. So 84 is right here, and the swing high was at 83.84. This is the swing high. So basically, that's how you kind of read that. Notice how the Fib usually is interested in the 50 and the 61.8 Fibonacci retracement levels. They're usually interested in those levels a lot. Okay, so notice how the 50 though and the 61.8 Fib levels are intersected by the rising trend line. Okay, so you see how it's intersecting with the rising trend line right here is intersecting at 50 and 61.8. So these could be levels of potential support levels. 50 and 6.18 are very high potential support levels. Okay, when you're looking for Fibonacci retracement in an uptrend or a downtrend. Okay, these are very good levels. 50 and 61.8. These levels could serve as potential support levels. There are only one way we can find out though. Okay, so guess what? Price did go to the 61.8 Fibonacci retracement level and held, there for a little bit, and then price bounced off of there before heading back up. It bounced off the 61.8 Fib level. If you had put a buy order or a pending buy order at that level, you would have had a perfect entry. So this is how we find sniper entries off the trend line. This is the trend line right here. Okay. The trend line is intersecting with 50 and 6.8. 50 and 6.8 is a good level. Price does go to 23, then it went to 38, then to 50. It was bouncing off the 50 level a few times. As you can see, it was bouncing off the 50 level. Then it shot down right here to 618 extension. Retracement level before heading back up. The green candles before shooting past headed back up. It tested off the 61.8 retracement level, and before heading back up, eventually going past the 50 level, the 0.382 level, and the 236 level, and even going past the swing high. Remember, this is the swing high, this is the swing low. Even going past the swing high, price eventually goes past the swing high. As you can see, price broke through the previous swing high. Look at all those green candles. So you see all these green candles. Price eventually breaks through the swing high. All right. So once price breaks through the swing high, that's how you know, price is going up. But if you would have got in off the Fibonacci retracement level, off the 61.8 or even the 50, you would have been in good for a nice profit. So guess what? 61.8 Fibonacci retracement level held as price bounced there before heading back up. If you had set some orders at that level, you would have had a perfect entry. A couple of hours after touching the trend line, price zooms up like an astro, bursting through the swing high. So it also did test the trend line. This is why it's good to use the retracement in the trend line. You see how price tests that trend line, not just once, but 3 times, kind of like 2-3 times before heading back up, and off the 61.8 extension retracement level. So a couple of hours after touching the trend line or bouncing off the trend line, price eventually zooms back up, bursting through even the swing high. Aren't you glad you got this in your trading toolbox now? As you can see, it does pay to use the Fibonacci retracement tool, even if you're planning to enter on a retest of a trend line. Okay? So combining the combination of both the diagonal and the horizontal support resistance levels, whether it's an uptrend or a downtrend when you're doing a trend line, could mean that other traders are eyeing those levels as well. If you're doing a downtrend, you're going to be looking for resistance levels. If you're doing an uptrend, you're going to be looking for support levels. So uptrend resistance level, you're going to expect price to head back up to a resistance level, retrace back up to a resistance level before resuming the overall trend. If it's a downtrend and if price is an uptrend, then you're going to expect price to head back down to a support level before resuming back to a potential support level or resistance level if it's a downtrend. But for uptrend, you're going to wait for price to go back to a potential support level. This could mean that other traders are eyeing those levels as well, because a lot of people are going to use these tools and know how to use these tools. A lot of traders that's been doing this for a while, so they're going to also be eyeing those levels too. So 61.8 and 50 are for both uptrend and downtrend are good support and resistance levels. So take note as well. Other tools, drawing trend lines can also be very subjective. All of these technical indicators could be very subjective. That's why you must, actually know how to identify the trend and know support and resistance levels. All right. And even know the Fibonacci, how to use Fibonacci, which I think y'all know how to use the Fibonacci retracement, but you don't know exactly how other traders are drawing them, but you can count on one thing, that there's a trend. So trend lines do help you identify the trend. So if you see that it's an uptrend, it's developing, you should be looking for ways to go long, okay, to give you a better chance of a profitable trade. Wait for price to head back to retrace back off a support level. Use the Fibonacci retracement. See if it's going to retrace off use the trend line. And look at the resistance support and see if it's an uptrend. Look where its price is going to retrace off and find potential support level. It could retrace off the 61.8 or the 50 level, retracement level. So you want to see where price is going to retrace back at. Okay, if you see an uptrend developing, you should be looking for ways to better your chance of a profitable trade by going long. Looking for different ways by using the Fibonacci retracement, like I just said, like we just broke down, and as you can see, it went to 61.8 level. Once you find this where price wants to go back as far as support for the uptrend or resistance for the downtrend, then you can pop out your Fibonacci retracement levels, and you can get in for a good chance of, or a better chance of a profitable trade. So you can use the Fibonacci retracement tools to help you find potential entry points. Alright, so gang, it's your boy Nature, aka Nature. In our next video, we'll go over how to use Fibonacci retracements with Japanese candlesticks. Alright, so this is it, gang. How to use Fibonacci retracements with trend lines. Gang.